Well, good morning and welcome back to another market open live stream. We've got some more red on the itinerary for today. We do have jobless claims that came in slightly higher than expected, but those are unlikely to really be any kind of market mover, especially since during this last week you get a lot of seasonal adjustments right around the holidays, and it's kind of like no, and we didn't really miss by more than about 10,000 on jobless claims today, so not that big of a deal. The more important number is actually going to be, and the catalyst really is going to be tomorrow. Tomorrow is going to be the real one, and that's when we get the jobs report, which is the unemployment report, and we'll get a new unemployment rate. That's going to be pretty big, as well as Wednesday's CPI data release, which could be pretty nasty. The tomorrow's figures, we are looking for jobless claim, or not jobless claims. Tomorrow we're looking for payroll numbers of 433,000. This is revised slightly up from 420,000, which is what the estimate was yesterday on Wall Street. And it revised up because the ADP numbers came in so incredibly high. They came in with more than a double yesterday. A really high read on jobs is just more of a signal that the Federal Reserve's job is mostly done in terms of price stability. I'm sorry, not in terms of price stability, in terms of maximum employment. Price stability is where the problem is, and that's why we're seeing so much talk about rate increases and running off asset purchases. But then we have also the unemployment rate, which is expected to go down 0.1% tomorrow if we hit that about 433,000 jobs. Obviously, if that beats double like the ADP did, the unemployment rate could even go below 4%, which would be incredible. I mean, if we get a headline number like 3.9%, that would be a very good and strong sign for the economy. But it'd also be a strong sign that, all right, let's just again reiterate that we got to focus on inflation, which is less ideal for especially tech and growth stocks. Now, then after this, on Wednesday, we get that CPI data. And really, for in my opinion, tech or growth stocks to really have a nice run, you probably need to have some form of a miss on either of these. That would be potentially less jobs than expected, which I don't think is extremely likely, and then some form of a miss on CPI. But unfortunately, right now, the estimates are that CPI is actually going to come in worse than last month. Last month, we had CPI at 6.8%. We're now expecting it to come in at 7.1%. So the headline inflation read is going to be even more ridiculous than what we had last month. So probably too soon to actually expect some form of an inflection in inflation data. So maybe it's time to roll some of those or some of those call options. But anyway, yeah, let's see. They're the 10-year Treasury popped off to another new high, almost the highest point it's been in about a year. It ran up to about 1.75 before pulling back to just roughly 1.73. At 1.75, if we go back out to a year here, take a look at this. There you go. There's the last high, 1.75. Back in March of 2020 is when we last saw levels essentially this high. And we briefly touched that this morning as well. So a little surprising that we've seen this very, very strong surge here in the 10-year recently. But then again, if you align that with the Federal Reserve's action, it kind of makes sense. Looking at the 10-year, it's up a smidgen, 0.86%, also moving up substantially here recently. This certainly expected to rise more as rates are expected to go up. We've got about 1 in 3 Americans apparently going into debt by more than $1,000 for the holidays. Wonder how much of this is related to buy now, pay later. Sales were up about 11.5% for the holiday season compared to 2020. And the average debt that people went into was about $1,249 for holiday spending. holiday spending is it's really a cyclical thing that actually gets people into a lot of debt every year, where you'll go into the holiday season with no debt or little debt, and then you load up on all this debt, and it takes you until like March or May to pay it off, or sometimes even longer, and then the cycle just repeats every single year. I think it's a relatively bad idea to go into debt for gifts, and what we call in the course member lives and courses, butter. Stay away from the butter. But anyway. So, okay, broadly though, let's look at the indices. Dow futures up 0.23%. So Dow actually moving green. S&P futures up 0.01%. Nasdaq futures down 0.47. That's where your pain is. And this is expected at this point that tech is going to continue having this sort of pain. And it's quite possible that that pain won't go away until there's some form of an inflection in the behavior of the Federal Reserve. So that could be it could be an extended buying season. Let's put it that way. Bitcoin down at 43,179, down 7% in the last 24 hours. Ethereum 34, it's been sitting under 34 for a little bit too. Solana 149, Cardano 123. I mean, some of these really really shaved off some of the price. I mean, almost all of them are red here. So you've definitely got some pain over the last week here. Lots and lots of red in the crypto space. Yeah, so let's take a brief look at the Wall Street Journal, and then we'll jump on over into the sticks. So, of course, front set here on the Wall Street Journal, tech stocks set for more losses, with Bitcoin and Ethereum falling. We already know that. It is interesting that, yeah, at least I think it's interesting. You know, a year ago today, I did a live stream, and we should really look at it here. Let me see if I can pull it up. The live stream a year ago today, and I was wearing a green suit that day. I don't even remember why I was wearing a green suit, but I was wearing a green suit nonetheless. And take a look at this. Okay, there we go. It was also the day that I predicted the two peaks close to the inflation days for Bitcoin. So that was fun. Yeah, that was in the course member live. But take a look at this. This here is the Capital lockdown live, 10 hours and 18 minutes. And this was, oh my, I think that's the Ashley Babbitt here. But anyway, this is how it all started. It was so crazy. Just to throw back to this, I was streaming with my broken headphones because I always during the election. I stream both candidates, Trump and Biden. I was streaming this, and I have to say that the rally was like the same thing from the night before. The night before he was in Georgia, it was like the same talk, the same discussion, and so I was kind of like really bored and tired, but I still hung out anyway. And then we went over to election certification. I'm like, all right, it's time to end the live, was kind of my thought. And what was it? It was somewhere. Where was it? Oh, yeah. Right here. It was so weird. Something about, I think this guy's talking, and we won't spend forever on this, but just briefly, this guy was talking. Let me see if I can remember this. And then he gets interrupted about them needing to lock down or something. This was so crazy.
Need to do something. My challenge today is not about the good people of Arizona.
There.
And it will stand in recess until the call of the chair.
We'll pause.
Protesters are in the building.
Thank you.
Oh, it wasn't anything you said. That's a security threat. Oh, they just cut him off. They just cut him off because something's happening. They're bailing out. Oh man, that's crazy. It's so weird looking back at that because it's like really, really creepy. It is. It's just like, oh, like, whoa, geez. Like no freaking idea. What was gonna happen. That's insane. And there it is. Then it kind of started. the crowds, the locking down into the chamber, a standoff in the house. Yeah. Oh my gosh, look at this. Oh wow. This is wild. Anyway, shout out to this 10-hour live stream, folks, from a year ago. Oh yeah, regaining control. I mean, that was wild. So Senate resumes. I mean, we streamed that whole day. That was wild. Anyway, whew, that was crazy. So anyway, that was a year ago. So wow. Okay. Next, certainly a lot has happened since then, politically and with COVID, and oh my gosh, remember that was still the alpha surge, the COVID winter. Anyway, all right. Walgreens posts higher quarterly profit, raises guidance. Ooh, good for Walgreens. Probably getting all those booster people in there. So, okay, let's go ahead and take a look at what we've got in Stockland over here. I'm personally curious about rotating some of my positions into more concentrated positions. This is what I like to do anytime the market falls. I sell some positions, even if I like them. I sell some things that are down similar percentages to other things, and I concentrate into things that I really like. So we'll see what happens here, but we've got Microvision at 10, a fall here of 10% almost. Wow. There's got to be some particular news on Microvision. I don't exactly know what that is right now. Let me see here. Micro MViz. Yeah, one person died. Yeah, that is right. Last year, well, multiple people died afterwards as well. Either from I can't exactly remember what they all died of. Some, I think a lot of them were suicides, unfortunately. Okay, anyway, the Microvision, let's see. Do we have anything on Microvision? Microvision's are in aftermarket trading. Microvision Inc., investment community and press webcast. So some kind of press webcast. Some sort of webcast yesterday. And that's the only catalyst I see here. I don't exactly see any kind of like news that came out of this, but that's quite wild. 10%. Wow. Okay, so Netflix down 2.2%, Cloudflare 2%. This is a drop in the bucket. Some of the negatives that we're seeing today compared to what we had yesterday. Tesla down about 1%. So it looks like there's some form of relaxation here in the pain in the tech space. Still got Nikola, Dick's Sporting, some of these moving up to the green side. Walgreens, even their good news is somewhat tempered here, only 2.55% up on what appeared to be relatively good news. JP Morgan still moving up. Take a look at how they've been over the last few days. Yeah, look at JP Morgan during the pain here, folks. During the pain, really, of the last couple weeks of the Fed fears here, JP Morgan has been popping off a little bit. We're almost at all-time highs on JPM, which was about 172. We're sitting about 163 right now. So a little bit of a excitement here. So let's see, and it somewhat makes sense too when interest rates go up. Oh, thanks for saying that. 14-incher. Wow, 14-inch. Jeez. Yeah, 6% in on your course. Very helpful. Well worth it. I can't wait to get the other course. That's awesome. Thank you for donating $5 to say that. That's super cool. Enphase. I love Enphase. So I think we're at a substantial support now, actually. And I've had these lines drawn for a very long period of time. Unfortunately, when this dropped like 7% in a day over here around that 220 range, I did a little bit of buying the dip over here. I did sell a little bit, not a lot. This is a large core holding of mine. I did sell a little bit at the top, so I was able to lower my basis by doing that, selling here, rebuying here. But it didn't time that rebuy as perfectly as I could have, especially since I had my support lines. But I don't necessarily think anybody thought when we were in December, after December 3rd and 6th, that we would just keep going and just like we've been leapfrogging down. Yeah, I mean, look, there is still more downside risk. I remember when I bought, I didn't buy at 108, ran out of money, but I bought somewhere in May right around 120 over here, which was pretty close. And Enphase also started buying then. Like the executives started buying, which was very interesting. So it gives you a little bit of a tell. But here's we're not going to listen to all of this. Oh, not that. Those are some of the notes here.
The will of the people was under assault. The Constitution, our Constitution, faced the gravest of threats. Outnumbered in the face of a brutal attack, the Capitol Police, the D.C. Metropolitan Police Department, the National Guard, and other brave law enforcement officials saved the rule of law. Our democracy held. We, the people, endured. We, the people, prevail.
So again, we're not going to watch the whole thing here. It's just worth noting that Biden is speaking here. So okay, let's but yeah, anyway, so Enphase is sitting at a nice 155-ish. It's at 157 right now. 155, in my opinion, relatively strong support line. That doesn't mean it's not going to break through it. I mean, we've seen that time and time again. I kind of wonder how C3AI is doing. C3AI, yeah, look at this. I mean, here was a company that had a stronger set of support, and it really played this line quite well for a while. And it just you could see that the market just don't sometimes care. So you still got this substantial decline over here on C3AI. Robinhood sitting at under $16, folks. It is literally. I mean, you buy this stock and like 60% of what you spend on it is going into cash, which is all basically going into a fire pit. So you know, if you want cash on fire, you know, here's that option for you. But anyway, just continuing to follow this miserable and ironic random line that we drew of a trend line to zero. You know, we drew it as a joke by just going from the top to zero. And I don't think the stock is treating it as a joke. I actually think the stock believes that it must follow the trend line here. Anyway, all right. So let's see here. Green, Bed Bath and Beyond moving again. Honest Companies 2%. It's almost like the market's chilled out a little bit, taking a little bit of a chill pill. Not that terribly much of movement. A couple percent pluses and minuses. And obviously that could change right when we open up, but I really think this is probably because of anxieties over well, essentially, what am I trying to say? I don't know what I'm trying to say. You get a big drop that the very next day, you kind of chill, right? We see that frequently. It's like you get a big red arrow or a big red candle to the downside, and then you kind of just the next day is usually like, either soft bounce or tentativeness, and it really feels like we're getting some of that tentativeness today. So we'll see. All right, so let's see here. How are these futures doing? All right, never heard of Doma or Rely, sadly. Nasdaq Futures, yeah, this is all relatively stable. If anything, the Dow has just moved slightly more to the downside here. Golly, the chat here did really turn political after the whole, Capitol riot mention. I don't necessarily think it's true that BLM was ignored by the media last year. Don't get me wrong. I mean, there's a lot of madness that happened last year, but I pretty clearly remember in the summer the riots getting covered because I kept getting asked, "Hey, are the riots going to affect the stock market?" And the answer was no. Like, remember the meme of the kid on the swing with the fire in the background, like the kids laughing and on the swing, and the fires are going on in the background, everything's on fire. That was the riot versus the stock market was the label. It was like the BLM or maybe not even necessarily BLM, but just whatever, the riots versus versus the stock market, because the market kept going green during the summer. Anyway. All right. So let's see here. You should. Oh my gosh, you gotta be kidding me, right? Come on, nobody's gonna do this. You should report your at-home COVID test results, experts say. Come on, man, nobody gonna do that. I mean, sure, should. Well, how? Come on, man. Let's see here. People should report any positive at-home test. You'd think if they wanted this, that you'd put some kind of like pamphlet or something into the actual test. Okay, so how do you do it? Come on, man. They say they're going to tell you how to do it. But I scrolled through this. Here we go. Oh, okay, here we go. Some local health departments have launched self-reporting portals. Okay, so not everyone. Some cities and some counties have them. This is why government's so broken. It's like, and it kind of bugs me a little bit. But when you had Biden, for example, say there's no federal solution to this problem, it's like wait a minute, come on, man. Can we put together one national self-reporting website? Can we get enough freaking tests before the winter surge next time? I really hope there is no next time, but come on. I don't want to hear about it. There's no federal solution. It's like most of these problems get fixed at the top. Send people N95s. The good ones. The American-made ones. Talk about the Defense Production Act. Where are more of our Honeywell filters? These are good. Good for construction, too. If you ever work around, I probably wouldn't wear them for asbestos. But, I mean, I would at least wear it for asbestos as opposed to nothing. Asbestos, lead, carpentry, right? Don't get that stuff in your lungs. Yeah. All right. Let's see here. CNBC covered a new study last night that says the at-home tests aren't detecting Omicron till 7 days into the infection. I have believed that. I've known a lot of people who literally have COVID symptoms and they're just like negative. And it's like, come on, that's stupid too. CNBC negative Omicron detecting 7 days. Let me see if I can find that. No. What's the title of that? I'd like to see that. Oh well. Kevin, stop it. The former guy ignored it too. Hey, look, I don't really like talking about the past. I like talking about what we've got going on right now. Y'all can have your debate in the chat over whether you like Trump or Biden. It doesn't freaking matter to me. I hate politics. I hate it all because I feel like everything's like nobody seems to care about actually solving problems. The bottom line is Biden's the president right now. We didn't get N95 masks and we didn't get enough tests. Okay. So you don't have to be a Democrat or Republican to feel that. I think we can all agree that was it was pretty predictable that we're going into a COVID winter. We should probably prepare. And I know that we've had some insane some surges here and just the amount of cases. I do agree that I don't know that we could have predicted how many or how much of a surge we would have had. I mean, I think we just broke like 700,000 cases or something like that. It's wild. Check this out. Let's see here. No, we're over 700 something thousand now. I think that's still a little day behind, but anyway. So thoughts on pins. Pins. Oh man. Yeah, I mean, it's gonna continue to sell off along with the other tech stocks. But if you like it, then maybe there's an opportunity for you to build a position in it. I personally haven't. I prefer Etsy, Enphase, Affirm. Some of my core holdings, Tesla, a little bit more. And it's during these times that I don't mind selling, just to pick up a more concentrated positions. So okay, let's take a quick listen here, just for another minute or so, to Biden, and then we'll go to the market open.
In a pandemic, so much great risk to their lives. They should be applauded, not attacked. Right now, in state after state, new laws are being written, not to protect the vote, but to deny it.
Okay, this
Not
is
only-
literally just going to talk about now fair elections and voting, and that gets real political fast. We're not going to talk about that. We're going to talk about a stock, something that could bring us all together, like losing money. It's been pretty wild 2021, and unfortunately so far it feels like that that sentiment is continuing for the time being. Hopefully this comes to an end here, but oh man, why is this not working? I wanted to log into my M1 Finance, but I can't do it. I think yeah, oh well. So, well, okay, fine then. That's kind of annoying. I think I did initiate a brokerage transfer. I'm pretty sure I did. But I thought that I didn't think it was going to go through yet. Oh, well. I've been transferring a lot of my stuff over to JP, because then you get a bigger credit line. Not that I really want to go more into margin. But it's one of those things where it's like better to have and not need than to need and not have. Kind of like what they say about guns. But that also opens another political can of worms. Yeah, no, I apparently cannot do this today. Oh well. Well, I guess that's not going to happen. All right, let me try one more, and then we will go back to news, especially since we're 2 minutes away from the opening bell. I hope they cover the bell. Sorry, yeah, no, can't do it. All right, whatever. Okay, so how are we doing? How's the SPY doing now that Biden's talking? Well, it's going down. Kevin mentioning all of your political hot buttons today. Politics is so funny. I really think probably 95%, I'd like to say more, but probably 95%, maybe 98% of us can all have a beer together and have a good discussion about, I don't know, whatever it is in your world or the stock market or whatever. Yet on freaking Twitter and the internet, everybody hates each other. Oh my gosh, it's dirty, man. The internet's rough. Like, how's the metaverse going to be any better? I mean, it's going to, like, you know what I want to see? I want to see metaverse fights, like metaverse fist fights. Like, go settle your disputes like a man in the metaverse. All right, let's see if they actually cover the bell. Come on, give us the bell.
Somehow those results are accurate on the same ballot.
Ding, 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 ding. Really? Is the Biden talk really that exciting right now that they're going to skip the bell? Really? Like, at least go over to the bell for a second. Come on, man. Ah, jeez. All right. Well, whatever. Here's the S&P 500. Oh, look, there's hope. I see hope, folks. Hope. Oh my gosh. Jimmy Z says, Kevin, after yesterday's report, have you changed your mind about inflation? The answer is absolutely not. My opinion has been the same. At some point, inflation will go down. Unfortunately, that some point is just taking longer to get to. But that inflection point will come. I'm not optimistic anymore that it's going to be January, though. I worry that we're going to have to wait until like March or April, which is unfortunately going to coincide with when rates are likely to move up. So I expect more drama in the markets. Wow. Robinhood is now at 1538. Oh gosh. It's just you just can't pick a worse stock. Oh, the thing's gonna go to zero. Get out now before it burns down. Lemonade 2.6 to the downside. It's at 35. Like and this is the scary thing, folks. Almost all of the floors we've been talking about. Now, okay, all right, here we go. Faded Polo says I'm a clown now. Well, first of all, when have you ever considered me not to be a clown? I mean, have you seen my hair and the hats I wear? But anyway, Kevin is a clown now, guys. Inflation. One America, what, the news network, has never went back down. Shake my head, fully delusional. Yeah, okay, all right. So, fully delusional. Let's see here. So, if we go to inflation, CPI, St. Louis, Fred, in the United States, let's look at what fully delusional looks like. So this is your nominal CPI. Let's edit this graph and go to percent change from a year ago. Okay, there we go. And let's see here. So this is inflation over our history. So I think it's interesting that you would say that inflation has never gone back down, because if you take a look at this line right here, this over this is the monthly chart. Let me do a year ago. Hold on, percent change from a year ago. This makes it look there you go. This is a little cleaner rather than monthly. So here are your high inflation periods. Apparently, according to the person who's calling me a clown, inflation has never gone down. But when I look at this chart, it seems like high inflation is the abnormality instead of the norm. So, I think when we look at logic, we have to look at statistics and realize that painful periods can feel like they're going to last forever. And these are usually the most opportune times to set yourself up for substantial wealth and success in the future. But oh well. Sometimes it makes more sense to lash out at people than it makes sense to use logic, and so it's okay. All right, no worries. I got my coffee, so it's all good. All right, so I'm actually surprised that we're not deeper in the red here. 3% is the biggest losing stock right now. It's not that bad. And I know that it's kind of sad to say, like, these days. It's like, oh my gosh, something's just not that bad. But, it's true. 3% to the downside just ain't that bad. Right? So we've got Nikola. What's funny about Nikola is it keeps going up and it keeps coming down. It's kind of one of these that, like, people keep going like, yay, it's up 10%, but it just always seems to come back down to like $10. It's kind of funny. So let's see. UiPath, look at that software coming back. Holy moly. check this out. UiPath, folks. Oh my gosh. So this is one, and honestly, I just feel bad for somebody like Kathy Wood, who's all in on tech. Oh wait, so am I. But somebody like Kathy Wood, who's all in on not just tech, but also heavily smaller caps, and bought the crap, for example, out of UiPath consistently. And I mean, it's a terrible feeling when the stuff you buy is down 50 freaking percent. It just kind of makes you want to go, F it, just sell everything and invest in the S&P 500 and call it a day. But ironically, if you did that now, you sold out of some of these things at the bottom now, and folded over to the S&P 500, you'd probably be signing up for potentially a negative S&P 500 year, or a slight gain for the next probably more on the slight gain direction for the next 4 or 5 years. And the next 4 or 5 years, you could look at 3, 4, 5xers on some of these stocks that are just devastatingly cheap. So I do agree in some part with Kathy's deep value argument. I mean, like Matterport's sell-off yesterday to $15 was quite insane. So anyway, it just is what it is. I wanted to do a little bit of rotating in the portfolio, but again, I'll do it later, and I'll send the alerts in the course member live, or whatever. If I trade before that, I'll do that before that. But basically, I'm not going to say exactly what positions I was going to, because I just haven't made up my mind yet either. We talked about it a little bit yesterday, but basically, my belief is that and this is something maybe to consider about your portfolio too, when the market turns red and everything is losing money, in my opinion, it actually makes sense to concentrate your portfolio. And here's why. Okay, when the market goes up, here, it's easier to just visualize this. We've talked about this before, especially while the market was going up. We talked about this a lot. So when the market's going up, what do you have, folks? What does it mean when all of a sudden your stocks are going parabolic? When a firm's like 170, Enphase is like 280, and Etsy is like 240. Does that mean you're a brilliant investor? I mean, look, these are great companies. In the long term, they're going to do these things. But in the short term, what does it mean when your stocks are going parabolic? Well, the number one thing it means, folks, is this is your risk threshold. It's the price in the short term is really just the threshold of your risk. So the price skyrockets, your risk goes up. And in my opinion, if you're riding sort of your risk going up, you should probably be considering diversifying your portfolio into many different stocks and avenues. So that way, when this comes down, hopefully you're diversified and somewhat insulated against that risk. Alternatively, when markets fall and you hit bottoms, or sort of you drop off a cliff, which you get sometimes, in my opinion, these are opportunities to concentrate and actually, let's say if you had 20 stocks over here, maybe you go down to 10 stocks over here, your higher conviction, higher sell-off names, because I believe you get much more of a substantial upside in doing so. That's not necessarily always going to be true. I mean, who knows? You could end up concentrating into a company that just goes bankrupt, right? So there's definitely a risk of that. But am I looking at gold coins now? Come on, man. Every day I look at gold coins, except my gold coins are NFTs. Not real gold, no. Joy, thanks so much. Oh, I appreciate you saying that. Thank you. Yeah, 99 cents. Awesome. Never argue with stupid people. They will drag you down to their level and beat you with experience. The irony. Diversify out of Tesla. Yeah, when the market's high. But actually, Tesla is at highs. Yeah, you're not wrong. Tesla is at highs. So Tesla's the problem. And the reason why I'm like 42% Tesla is I just it is just by far the highest conviction stock that I own. Every time I think about diversifying out of Tesla, I do my fundamental analyses, and I'm like, no, you know what? I'm good. Still good. It's been a wild ride. Anyway, so what's happening here in the market? Let's go to CNBC. Tesla's an ETF. That's right. That's right. I really believe this. I know people say this is crazy, that how could one stock be an ETF? But, you know, when you think about it, it's like, oh, Biden. Okay. I was wondering, why was he walking away so slowly? He had to get off a stage. He's still kind of walking away a little slowly. Anyway. I don't even have it on the screen. Whatever. Doesn't matter. But anyway. Yeah, I mean, so semi-trucks, one segment. Energy, utility grade energy, another segment. Home batteries, another segment. Home batteries and inverters. That's Enphase. You know, Enphase has a whole business around home batteries and inverters. And that's just one of the things Tesla does. Nikola, trying to do semis. Just one of the things Tesla's doing. Pickup trucks. It's like what Ford's doing. You know, the sedans and the SUVs. You know, that just competes with everything. Toyota, you name it. The potential for a $25,000 vehicle. Tesla solar panels. I mean, Tesla insurance. It's honestly insane how much they've got how many different hands they have in different cookie jars. It is wild. And you know, it's not a perfect company. Don't get me wrong. Like my Tesla, I still don't have a safety score. It really pisses me off. You know, there's so many things that they could do better and more clearly. They can communicate better. But you know, it's okay. It's all right. That's you know, when it's perfect, that's when I sell. That's what I've decided. When Tesla's perfect, I sell. When my father-in-law buys a Tesla, that's when I start selling Tesla. Because just so you know, my father-in-law is somebody who really loves you know, keeping a car for 15 years or so, which I really admire, I really respect. I think it's very smart. I think new cars are a waste of money. But will not buy a Tesla because Consumer Reports says they're at the bottom of reliability. And anytime news comes up about a recall, I hear about it. Not from the news, but from him. So anyway. All right. So let's see, folks. Come on. Where are the deals today? What are we gonna do today? What are we gonna do? So here's what I'm gonna do, okay? I'm gonna make a list. I'm gonna make a Santa Claus shopping list because you know, what good is Christmas without a good discount? Like the birthday coupon code on building your wealth with the programs linked down below. All right. You know, honestly, I think one of the big things about my course member live streams is it's almost like we have therapy sessions. When the market's green, we don't go euphoric. When the market's red, we don't you know, panic and lose our minds. It's a really good group. Anyway, let's go find some deals. Okay, so I have to say, Alibaba is on a little bit of a breakout here. Okay. I like this. I like it a lot. I really like Charlie Munger. I like what I'm seeing at Baba. I'm still nervous about the Chinese consumer, but I'm curious if we have hit bottom. And this is an interesting one. I'm writing this one down. Okay, so I'm gonna write down the Babas. I'm not touching Nikola. I'm sorry. Robert, if you're watching this, I'm sorry. I just can't do it. I do think it was smart that they dropped the Tesla lawsuit. Get out of Tesla's face. MP Materials. Okay. Wait. MP Materials was at $52. What happened? Yeah, look at that. MP Material was at $53. Yeah, look at that. Ran up to $53. It's down at 47 right now. Probably won't buy MP Material, but I'm gonna do a fundamental analysis on MP. So I'm going to write that one down. So then we've got Xpeng Motors, 3%. Okay. Rocket Lab. Where are my opportunities? Carnival's back to 22. Don't really care. Dave & Buster's almost at $40. My goodness. Let's see here. Ubiquity. How is Ubiquity during this tech sell-off still at $300? That's kind of impressive. Nvidia held firm, folks. Did well. 281 held quite firm during that pain that we had yesterday and the few days before. So I do need to increase my Nvidia position a little bit. Probably not much. One of the downsides of Nvidia is when a stock rallies like 120%, it usually your next year is not going to be as juicy. No guarantees. I mean, if you said that about Tesla, you would have missed out on gains. But you know, oh well. So what else do I want to touch here? Wynn Resorts, where are they? There we go. $85 for Wynn. I'm surprised they're still so low. And Wayfair. Honestly, Wayfair is probably worth a little bit of fundy looking at. So I'm going to write that one down in terms of fundies. See, the beautiful thing is when we get these big sell-offs, this is when fundamental analysis is more fun because everything's freaking cheap again. You know, that's going to change a little bit over the next days and few hours. But if you're doing fundamental analysis, don't get impatient over like 1 or 2 freaking percent here or there. I'm not buying stocks for 5 or 10%. I'm buying stocks for 1, 2, 3, 400% over the next 5 years here, right? And I do think it's interesting that Lemonade DocuSign did DocuSign. I know Lemonade broke. Hold on, let's quickly look at floors. It's probably honestly worth re-looking at Lemonade. But it is a profitless company, so you have high risk here. Profitless companies are the easiest to sell off algorithmically. And remember, most of our trading right now is algorithmic. Oh my gosh, SoFi broke 14. Oh man, I'm gonna write that one down. SoFi under 14. That's nutty. FinTech has just been getting smoked. Beyond Meat also broke the floor. Jeez, man. The amount of companies that broke floor is insane. Cloudflare, look at that, 105. Oh man, I think we're gonna look back at some of these prices. You know what happens? Like it's so crazy, and I say this all the time. I'm like, the time to buy is when the market's red, and then you know what ends up happening? Without a doubt, Tesla ends up going up 13% on one day, and then everybody comes out of the woodwork with guess what? The question. Is it too late to buy? Where were you on the red days? Where were you when it was 886? I bought at 890. It's wild. What else is wild is we're about to go under 15 on Robinhood. Robinhood's not one that you could really buy right now because it just keeps going down. MTTR. Matterport's flat. Wow. It moved up over 16 again, but now just pulled right back. Gee whiz. Piton. Wow. Yeah, I don't know that you could really go. I'll probably stand by on Piton myself. Where's my other CCL? How's a firm doing? That's another one we got to write down. Yeah, I still own SoFi, and I do think it's cheap. Oh man, $79 for a firm. I mean, you're really like eradicating a lot of the big partnerships that were announced with a firm that should blow up some of these earnings. Toast at $27. It's worth doing a new analysis on. This is really incredible. So okay, what other? So Tesla 1069, not like a substantial discount there at Tesla. The Alibaba one makes me curious. I don't know if it's at a level where it really protects me against my concerns over the Chinese consumer, but it is rebounding. Maybe that's when you go in with a stop loss set. Looks like the pain really leading certain stocks down here. Oh my gosh, backed holdings, folks. $50 stock turns to $5 stock. I mean, you want to look at 90% sell-off? Just look at backed holdings. This is insane. Wow. 50 to 5. What a burn. Rivian falling more, back to lows here. Man, I got so much hate. So much freaking hate when I said I was shorting Rivian and Lucid. And when this thing IPO'd, I'm like, nope, nope, nope. And it's so funny because, you know, in the short term, everybody's an expert. This thing, I made a video saying I wasn't buying it. I thought it was overvalued at IPO price. Like, it wasn't even worth the IPO price for me. And it opened up at like, what, $90 or $100 or something like that. And I got all these comments from people, the brilliant minds of the comment section. Well, this aged well. Oh my gosh, Rivian's at 150 now. Your video aged real well. Bah ha ha ha. It's like, well, just wait. It's like usually long-term fundamental analysis wins. And I think that also gives you the confidence of, and I said the same thing about backed holdings, both Rivian and backed holdings. I made videos about saying basically, don't buy them. They're a bad deal. But no, you say something bad about a stock, people freak. Anyway, Upstart, where'd Upstart go? Upstart's at 119. Holy moly. I mean, that's a low. Yeah, it is. Oh, it's out of support. Look at this. We front ran bounced. In case you don't know what that means, front run bouncing is when you have a support line drawn, but you have a premature bounce right in front of it. That happens as people are like, okay, we're probably going to bounce at that support line, and then so you get that buying right beforehand. Yeah, that's great. Let's see here. Is Shift a buy? Ooh. You know, I should write that down on my fundy list too, because I was just going to ask, is it under $3 yet? I really like it at this lower support line. I sold all of my Shift, and I've been wanting to rebuy it. $3. This is where we bounced the last time. I'll do a fundy. You know what I'm going to do is I'm going to try to do this today. I'm going to put together I'm going to call it a quick fundy test, a spreadsheet, and I'll do a breakdown of some of these, and we'll see where the juice is, and where the real fundamentals are, because this honestly is the time to bunker down. And if you have not done any fundamental analysis for the past year, now's the opportunity to do it, because prices are low. Like, the worst time to do fundamental analysis is when prices are running, because nothing makes sense. Enphase is now down 3%, by the way. That's a good one. All right, Brian Lewis. Hats off to that one. That's a good one. Just out Robinhood to sell more shares, and we'll announce buybacks at $1. At $1. Dude, $1 is overpaying for Robinhood. 69 cents. Oh, man. Prices aren't low for ETFs, though, then don't buy them. Trade Desk. I love Trade Desk. Let me add that actually to my list. I want to do more. I want to do more now. Oh, wow. $78. Let's go. Yeah, I just bought more Trade Desk. What was it, yesterday or something like that? I don't know. I don't remember when I bought it, but wow, everything's sparking down again. This is so depressing and honestly quite exhausting. If you want to, if you are having a really good time in the market and you're in the indices, or you're in something like metkevin.com/basket, which has been doing extremely well, which we talk about in the course all the time, check out the programs on building your wealth down below. Get to that next level of wealth. Or if you're miserable and you're losing your pants and all your crap's going to zero, also check out the programs on building your wealth, because I think the psychology of money aspect is so important at times like now. And there's so much more than just, buy the dip, right? Like, you gotta be careful always just buying the dip. But there's so much to investing in, and these are really opportunities for investing. And being risk on, being greedy when everybody else is fearful, right? Everybody says that quote, but nobody actually does it. Well, I shouldn't say nobody actually does it. Very few people actually do it. And so who remembers when we were going through like the euphoria of markets in November, and the markets were just going straight up, up and up and up and up. And during these times, it was kind of like, oh, wow, investing's easy. Everybody's happy. I wasn't buying. I was selling. And that's really the mindset that you want to get into is, okay, who cares? Prices can, like, when prices fall, prices can keep going down. But the more you fall, the more resistance you have to the price actually going down even more. So it's the more the price goes down, the safer investing actually becomes. And so that's why I prefer picking up lows. Look, about is Hood a buy now? The problem with Hood is it just keeps going straight down. And I think you have a lot of institutions that are just straight selling this thing because it's been working. It's worked extremely well. And so, if you look at the fundamentals of Robinhood, the price is like ridiculously low. I mean, Robinhood is at this point a better deal than SoFi, probably by a factor of 2. And I know that sounds crazy because a lot of people like SoFi. I like SoFi, but I do think that. And I know a lot of people hate Robinhood's guts. And I do think that is a problem with the retail community. And Robinhood has a lot of reputation repairing to do, which is a big issue. But, what are you going to do, right? So Kathy's been buying Robinhood. That's true. Shorting the hood is working. This is true. Ironically, though, the shorts on Robinhood are not that high. Ironically, it's like 7% short. It's in fact here. I'll pull it up really quick. Give me a second. But that is. Oh, let's actually do that. We should look. This is an important thing for us to pay attention to, folks. You got to pay attention to the inflection point in shorts, because I believe the inflection point in shorts is potentially going to signal a small cap rotation, and that could be your potential signal. Thoughts on Visa at this rate? I bought at 200. Wish I bought more. It's funny, I bought Visa at 190. I think I actually sold at about 200 because I had to. I bought something else, that was one where I'm like, I could probably hodl that one, but it's not something that I'm super jazzed about jumping in on right now. More of, I'd rather get something else that's more discounted, in my opinion. But I don't think the financials are going to do poorly in a higher interest rate environment. Don't get me wrong. So I wouldn't bet against Visa or the banks, right? Okay, so take a look at this. This is the short interest on Robinhood, 7.73%. So it's actually ticking up a little bit. Again, that's because the play is working so well. Tattooed Chef, 33% short. That is stable. Corsair, 30%, somewhat stable. Lemonade is sitting at 38%, also somewhat stable. Affirm is only 6% short. Wow. So still no inflection point on the shorts. Shift Technologies, we're at 28.7%. Still too early to tell. Yes, Ortex is a good website for this data. Pay the money. It's a good one. How much Lemonade am I holding? I think less than $10,000. I thought I completely sold out of it, but I think I still have a little bit in M1 Finance. OUST. Okay, I'm not going to do a bunch of tickers here, but that's at 9.3. Nvidia. All right, let's go back to the sticks here. Oh, I will look at SoFi. In fairness, I do want to look at SoFi and ARK. Those are good ones to look at. Yeah, see, the shorts on ARK are actually still going up. That inverse ETF SR came out at a pretty good time. People got so mad at me. People were unsubscribing to me because I said I was shorting ARK at $100. They're like, Kevin, ARK is at all-time lows. It's at $100. How could you short it at $100? That's so stupid. I'm buying more. And that was like right here. Meanwhile, it's like and now it's at $84. Whatever. Unfortunately, I let social pressure get the best of me on that one. Oh well, whatever. Whoa, Rivian's down like 9% all of a sudden. Holy moly. Oh my gosh. SoFi at 1350. Enphase is about to break under 150. I mean, the discounts we're getting now are quite incredible. Back under $29 for Neo, under almost $77 for Affirm. Golly, I am so tempted to just go all in on margin. It's scary, but I don't know. It's very tempting. Going on margin and set some stop losses. Boy, oh boy. Or even buy, some longer dated calls. They can really bleed though. But some longer dateds, I mean, like how much are you possibly paying for options right now? Like what's a $10 option gonna actually cost me for February on the RH? Let's get to the hood here, not the MPs. So what am I gonna pay? Or you know what? Come on, MP Weeble, you're pissing me off, okay? I was trying to click on the options for Robinhood. Dude, come on, man. This is quite ridiculous. There we go. Okay. So let's look at $10. I don't know. Let's go to like May. It's a little further out, but just for gigs. Is seriously nothing gonna load now? There we go. Okay. So if I go, I mean, I guess I can't really get the flow data. Oh, there we go. Good. So May, $10. Oh, hold on. What's the breaking news?
December, economists had been looking for a reading of 66.8. We'll be paying attention to some of the prices paid and the employment components, Jim. But it's all leading up to the big daddy of data tomorrow.
Oh, certainly. And that data does matter. I think I've done a lot of research over the years.
Okay. U.S. factory orders 1.6% November. Consensus was 1.7. Okay. All right. And then this PMI. All right. We'll come back to that. So anyway, look at this option here. So if I go for a $10, I've got a decent amount of open interest. I go for a $10 buy on Robinhood. A little bit. Well, actually, that's not that bad. You're paying about $1 for the option to get you to May. In extrinsic value. That's not terrible. So I mean, some of these are getting to such lows to where I kind of, it's to me, man, I don't know. Options are so. The problem with options is, you buy options. Price keeps going down, your portfolio looks like crap real fast, and it doesn't help you offset margin. Like you can't get margin on, but in most brokers at least, on options. So you have to be a little careful there. But the lower this crap goes, the more interesting some stock options actually look. To the point where I'm almost tempted on some of my positions just to take 20% out of the position, turn it into a long option. But I hate that because of theta decay. Because you do that when volatility's high, you could get volatility crushed. Let me read off the volatility for y'all really quick. And I've gone down this road before, and it can work out. But let me look at the volatility here. So what you want is declining prices and declining volatility if you're going to go for call options. So Robinhood's volatility actually hasn't really spiked that much. That's actually a good thing. We're a little bit elevated for Robinhood. For Affirm, yeah, this is crazy. Volatility is actually not that high. We are at relative lows for Affirm. This is incredible. How are we at lower levels of volatility? See, Tesla's at high volatility. Tesla's way up there in terms of historic volatility right now. But Affirm, Robinhood, what about Baba? What's the volatility on Baba right now? Come on, broski. Give me what I want. Give it to me. Elevated, actually quite a bit elevated on Baba. If I go for Enphase, we are a little bit elevated. Matterport, in terms of volatility. Ooh, Matterport's actually it's at a lower level. It's not at the lowest it's been, but it's at a lower level. There are some opportunities here, I think, in the options world. Again, it's risky, but I think there's some opportunities. Oh, wow. Like, for example, Toast is at half the volatility it was like 60 days ago. That's insane. That's good. I'm actually surprised to see that volatility is rotating down on so many different stocks. Wow. Okay. All right. Good. I mean, it's just you're getting that slow bleed. I mean, this is great for options pricing and really just, I don't know, loading up. It's obviously quite painful for hodling, but it is tempting. Let's see. Wow, Tesla's almost down another 5%, folks. So I want to look at this. Like, oh my gosh, Rivian's now down 14%. Holy moly. Dang it, I should have shorted Lucid again at $39. I was looking at it. It was green, and I'm like, I should short it. I should just do it. It'll be my hedge again. Nope, I didn't do it. Should have done it. That's all right. Talked about it. Okay, so let's see here. Call options on how deep can you go here? If you went to, let's say, Hood, I don't know, let's say you went to like even go extreme, you go to a $5 option. What do you have to pay? $5 buy. I mean, that's not bad. You're paying $10.35. You're paying 40 cents of extrinsic value to get you to May. I mean, if I go out further, let's go to January of 2023. Holy crap. I can get to January of 2023 for $1.70 per share in extrinsic value. Dude, that's not bad. That's really good, actually. Let me look at Matterport. There's another one. Oh, my goodness. So let's go to Matterport. Let me go to, gosh, the open interest is horrible. Let's go to 2023. Okay, here we go. Let's try, I don't know, we'll try $10 over here. So $10 on a call for 2023, that one's not as good. So you're paying about $3.40 for this one. So Robinhood pricing a lot better. But then again, Robinhood continues to get smoked, so maybe there's a reason for that. Enphase at 147. Ooh. Enphase. And the downside too of options, and so you do have to be careful of options. If you go into sort of an extended bear period, which you entirely could, it could really just crush your morale. See, you're paying a lot for the 2023s here. You're paying $50. You're paying about $20 in extrinsic value here. It is a more expensive price or stock though, so $1 to 20 could end up being relative. Have to divide to get the percentages on this, but there could be some opportunities here. But it does look like the market is more broadly selling down. S&P 500. Yeah, we're getting that sell down. First green candlestick happening right now, actually. It looks like we're getting a slight little rebound from bottom here right now. And let me see if that's happening on other stocks. Yeah, Lucid was just trying it. AMC, not yet. SoFi, not yet. Robinhood, nope, not yet. Tattooed Chef, no. ChargePoint, no. Everything's still going into the toilet here. Tesla, ish. Shift is now at $2.95, folks. Oh my gosh, it continues to get more and more beautiful. So tomorrow is not CPI data. Tomorrow is the employment report. Employment report comes out tomorrow. If we get a big beat and a higher month-over-month inflation read, we could see even larger discounts. So some interesting opportunities. SARK is skying. I know. SARK. SARK. Oh, wow. Yeah, $42. Yep. That's how the cookie crumbles. Look at that. $83 on ARK. Wow. All right. So let's take a look at the overall indices here. Indices are Nasdaq's down about 1%, Dow, S&P both down 0.45%. So the pain right now continuing. Treasury yields up again a little bit, 1.74. And 10-year, or let's go to the 2-year rather. 2-year over here sitting at 0.87. Yikes. Well, folks, remember, if you want to take advantage of seeing all of the moves, and I know it's a rough time for a lot of folks right now, but if you want to take advantage of seeing all the things that I'm doing to either rebalance towards these lower prices, or buy options, whatever I can do to set myself up for the largest potential gains over the next 18 months or so, check out the Stocks and Psychology of Money group link down below. You get all my buy sell notifications, and we'll do a course member live stream before the market closed today. We'll get to answer your Q&A and do some chatting. But yeah, there's a birthday coupon down there as well. The Path course, by the way, which is totally separate from like the real estate investing course, the stocks course. Those are the popular two. Path course is a new one that gets released at the end of the month. That price will double once it releases, because right now if you buy it, there's zero content in it, so it's on a pre-sale. And so a lot of people are bundling Stocks and Psychology of Money in the Path course because of that. But anyway, check that out down below. As usual, the price that goes up like the chart you want in the stock market. But okay, so SoFi is almost under $13. The sell-off apparently is continuing right now. Robinhood sitting at 14.83, Lemonade at 34. The sell-off is certainly continuing right now. Affirm at $75. Shift Technologies down about 2.9. Matterport $15, folks. Sell-off continuing. And yeah, I'm going to make some moves. So I will do some strategizing. Thank you so much for being here in the live. And folks, we'll see you in the next one. Appreciate you.